The following is a presentation of TFNN. It is now time for The Trader's Edge. Now, Steve Rhodes.
Good day, Money Masters and Treasure Hunters. Welcome to the May 29th wonderful Wednesday edition of the Trader's Edge Show. The opening bell on the Trader's Edge Show. Sorry about that, folks. My mind was looking at one thing, my eyes something else. I'm your host, Steve Rhodes, and I absolutely treasure your presence here today. My outcome, as always, is to help you to become a better money master and to provide you with tools that help each of us in order to lead an inspired life. Because leading an inspired life, folks, to me, that is what it's all about. I hope that's the same for you. Let's go look at one of our tools. This is the tool I call a pat on the back works better than a kick in the pants. Now, consider carefully before you say a hard word to an individual, but never, folks, I mean never let a chance to say a good word go by. Think about that. What a great law of life. Make sure you put that one in your arsenal if it's not already there. I don't know about you, but if you've ever had this experience, and I can tell you that I most certainly have, my bark is worse than my bite, meaning that from time to time, my temper has flared out of control. It always happens at moments of great frustration, and it usually centers around the action, quite frankly, of one of my kids. Now, it doesn't happen often, thank God, but it does happen, and I've got a pretty loud bark, and it's in those instances that I have to always remind myself that a pat on the back works better than a kick in the pants, because the kick in the pants is like fighting fire with fire. Truth is, water is what puts out fire, not fire. And if any of you have had that experience either on the giving or the getting side, well, then you know what I mean. Now, learning the art of responding calmly can give you a huge advantage in moments of great tension. You know, at times when emotions tend to take over, because giving into anger, when we do that, folks, it robs us of good judgment, which ends up leaving us regretting the things that we've said or maybe some of the things that we've done. And taking charge of our emotions, well, that is absolutely key. And you certainly have to do it day in, day out when you're trading, so you've got to do it in other elements of your life as well. The solution for me, when I get to a point where my emotions are just simply bubbling over, where they're taking charge of me versus me taking charge of them, is to sit down and put my thoughts down on paper. If you've never done that, I suggest that you try that, because the power of the written word, it helps you to rise above. And rising above is really what you need to do. You got to rise above those emotions, and it provides you with a power unlike anything that I've ever experienced in situations like that before. I was reminded of this last evening when I watched a movie called The Hurricane. I don't know if any of you have seen the movie The Hurricane. I don't know. I can't tell you. I've watched it for the umpteenth time out there. I don't even know how many numbers that is, but it's certainly more than once. Of course, that met my need for certainty, because I most certainly knew what the outcome was. And I recommend that you watch that movie. It's a true life story of Reuben Hurricane Carter, and even though I know how it's going to end, it still represents to me a great way in which to be able to deal with anger from time to time. And each of us have to do that on for every now and then. So it's a great movie. I recommend that you go watch it if you haven't, or if you have seen it, go watch it again. And the truth is that no one except ourselves has the power to make us angry. And when you can get your head wrapped around that, folks, that is powerful. Because if someone else assumes that power over us, well, the power to get angry that I'm referring to, it's really us granting them that right. And that's really what's kind of a cool thing about that movie. You know, here's a guy that was improperly. I'm not going to go into the life story of it, but the bottom line is just simply you want to be able to make sure that you control your anger versus your anger controlling you. So next time you find yourself getting angry, make the decision to try the old pat on the back approach. And if your emotions are just simply, just too high out there, then use the Reuben Hurricane Carter, Steve Rhodes approach, and that is rise above by putting things down on paper. Now, Benjamin Franklin, and we'll just leave it like this, he once wrote this. He said, "Remember not only to say the right thing in the right place, but far more difficult still to leave unsaid the wrong thing at the tempting moment, folks. So that is the way to live. Let's go take a look at these markets out here. Let's go see what they're saying. Right now, we've got futures trading off about Dow futures down 65 points or so. I think with fair value, the Dow would open up about 75 points lower. S&P trading out at 1648. That's off about 6.5 points. NASDAQ futures off 8, trading at 29.95. The King dollar down 42 ticks. That's caused by some weakness, some strength here. Some strength in the Japanese yen. Looks like that's up about 68 ticks. The euro as well up 56 pennies. Gold up $5 right now, trading at 13.84. Silver up a nickel, so pretty much flat, trading at 22.24. Light sweet crude off 67 cents, trading at 94.30. 64 cents, 94.37. Across the pond here over in Europe, we've got the DAX trading. Where's the DAX trading? Down 125 points right now. That's off 1.5%. The FTSE down 1.5% as well. That's off 103. Over in Asia last night, the Hang Seng off 1.5%+, down 369 points. The Nikkei not really doing anything. A flat market out there. That was up 14 points. And the Shanghai also flat, up 3. Our call number is 877-927-6648. Let's go see what is the message of these markets. You know, yesterday when we opened up the show, we had futures were up, and as the futures were up, we can see here at that 9 o'clock time frame. Let me switch over to about 9 o'clock. If you're watching us on Tiger TV, what you are taking a look at is the ES Mini 30-minute contract. If you're listening in on the radio or your mobile device at TFNN.com, remember, or at TFNN.mobi, go over to the homepage of TFNN.com and click on that device there where you can get this show streaming live to. You'll see a button with 3 little smartphones, and that'll be the way to do it. Now, what's really cool about the way that we take a look at technical analysis is we identify swing points, and one of the tools that we can use to understand where price is going to go, we can draw these leading indicator type patterns out there. And what a cool way to be able to understand. You know, I guess it's like this. Every now and then I'll use the phrase, how do you know where you're going unless you know where you've come from? And that is no more true than in using technical analysis, Fibonacci expansion and retracements out there. And it's like being able to, if you've ever stood at the bottom of the floor, have you ever been on the, in a tall building and the elevator button, or there's, you don't know which floor the actual elevator's on. Maybe because, the buttons aren't working, the lights aren't out. And isn't that frustrating to you? I know it's frustrating to me, at least. And how cool is it? How much easier is it when you know where the elevator's at? Well, in this case here, when you start taking a look at the markets using Fibonacci, retracements or expansion, it's just one way to understand where that elevator is when you're between floors, where you're likely to head to. If you pass one floor, you're going to the next one. And this way here, it allows us to measure price. Well, we took a look at the ES Mini. We knew that it was trading at the 0.618 retracement level, making a Gartley sell pattern. As it was doing that, there really were no bulls or no bears, I should say, in place because this was a Gartley sell pattern out here. So as we came into the 9 o'clock hour yesterday, we had the ES Mini. It was trading right around the 1665 level. We're at 1647 right now, and the market was moving higher. Futures were up. We had just come back from a vacation. But, of course, what we know as we took a look at the indicator down in the middle bottom portion of my screen, that relative strength indicator, it was in what? It was in that overbought territory. And we know that in order to stay in that overbought territory, well, it's not going to stay in overbought territory. It's going to work its way off. And it's either going to do that by moving sideways or just simply moving down. In this case here, we had the ES Mini go ahead and make an additional run, make that 0.786 level. Without any bears being around that 0.618 retracement level, it says that the price or the market wants to move up in that 0.786 territory. In this case here, we see a price rise into the 11 o'clock time frame. 10:30 actually got up to a 1672.75 out there. Then the bears actually came in. They came in from the Hamptons. They were driving nice. Picture yourself being a bear yesterday, and you got the markets. A bear wants to sell at the highs. A bull wants to buy at the lows. So picture yourself driving in from the Hamptons, rubbing your hands together, saying, "Oh, thank you, Lord, for this great gift out here. You've pushed the markets higher." And that's exactly what took place out here yesterday in the markets, because the bears, they finally showed up from work, or showed up to work, I should say, at 11 o'clock. And how do we know that? Well, they created this bearish engulfing candle, a candle here that engulfs the prior session as price had moved up to that 0.786 retracement level. It was also in overbought territory. Now what happens? What happened this morning? When you woke up this morning, you saw futures were down. At one point in time, I think the Dow futures are off about 100 points. Wouldn't you have liked to have known what that actually meant? I assume that you would. And it's really simple. Go get a chart like this or some type of charting package out here. Take a look at where price is traveling. Take a look at a retracement. You know, yesterday we did a 0.786 retracement up to the high. Take a look at from the swing point hammer candle down here at 10:30 on May 24th to the high yesterday. You realize that the retracement so far this morning has been down to the 0.786 retracement? It's a beautiful thing, folks. 877-927-6648. We'll be right back.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pezzavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Nothing has changed here in the futures market, so let me give you my take on what I see taking place here in the markets at the moment. And we're going to start off taking a look at the New York Stock Exchange. That's a chart that I've got up on my screen here. And the upper portion of the chart, what you're taking a look at is the price action. And then just below that, the red squiggly line, that's the relative strength indicator. Below that, you'll see a black line. That's the McClellan Summation Index. And below that, you'll see a blue squiggly line. That's the McClellan Oscillator. Now, there's a great book if you enjoy books, if you enjoy learning, if you want to just simply widen your scope on understanding things. There's a book that's titled Patterns for Profits by Sherman and Marion McClellan out there. It was produced quite a while ago, and actually, David White is the one that turned me onto this many years ago, and I thank David for doing that. And folks, if you haven't had a chance to check out the David and Tom software, the art of the charts out there, go over to the homepage of TFNN.com. Do yourself a favor. Number one, there's some great videos that teach you how to use or they show you the tools of the tools and the power of the package, and it's a great way to learn the A to B equals CD pattern. It's a great way to be able to have a scanner to identify for you potential butterfly and Gartley buy and sell patterns out there. It's a great way to understand confluence. Those would be zones where you would be taking a look at maybe buying if you're looking to go long or short. So it's a great way to be able to do that. An incredible package with it helps you to identify swing points and then the volume at those swing points. And visually, and time is key. You can make back money in a heartbeat. Time you can't make up for. And the way that you save time, the way that you invest in yourself, make sure you've got more time to read books such as Patterns for Profit, would be to have a tool like the Art of the Chart. So go check that out. And don't forget as well, we've got that Tiger Dollar promotion. It runs really just for the next couple of days here. So make an investment in yourself. Be able to make 20% on your money out there just simply by investing in Tiger Dollar. So you can utilize, maybe it's David's software, maybe it's Tom's, Basil's, Larry's service, my service, whatever it might be out there. Go ahead and make an investment in yourself. You should make investments in yourself each and every day. Now, let's take a look at what the New York Stock Exchange here is doing. New York Stock Exchange, really not often reported upon. I mean, if you were to turn on CNBC, how often do you hear them take a look at the New York Stock Exchange? Oh, basically never, for the most part. And if we do take a look at it, it's the wider breadth of the market, or one of the wider breadth views of the market. We're not dealing with the Dow 30 stocks. 30 stocks are going to control the marketplace out here. Give me a break. Let's take a look at what's really going on underneath the covers out here. So let's take a look at the New York Stock Exchange. Now, first of all, we can see here that the New York Stock Exchange, there was a 1 to 1.618 A to B equals CD pattern that formed out here. That's the upper portion of the chart. That's starting with a swing point from February 26th, that low, 8,700.73. Your B point out here happens to be the swing point of March 14th out at 91.28. And a retracement, if we take a look at that retracement here from the A point to the B point, it'll tell us what our C point retracement is. 88.64 was the 0.618, actually got down to a low of 89.69. So it didn't make it all the way to the 0.618 retracement. What's that tell us about the energy that's stored up? Is it going to do more than a 1 to 1 A to B equals CD? Yeah, most likely it is. In this case here, it did a 1 to 1.618 A to B equals CD. So that pattern completed out there. And if you have Tom's book, The Art of Timing the Trade, your ultimate trading vehicle out here. What you've got is if you do a 1 to 1.618, market's usually going to do something else. Well, what happens out here? We've got the market, and it's got a key reversal day as that pattern completes. That was May 22nd. That was last Wednesday, a week ago from today out here. Key reversal patterns are very important. Not only was it a bearish engulfing candle in the New York Stock Exchange, it was a key reversal day. And if we take a look down here below at the oscillator, that's the blue line at the very bottom. That's the day that the bulls actually fumbled the ball and the bears took over. We had the oscillator slip below zero out here. If you take a look at this line, if you take a look at the oscillator, you can see when the oscillator gets below zero, markets either move sideways or the bears really are taking control. What we also see here is the summation index. That's a black line down towards the bottom of my screen. You can see how that's turning down here. Folks, if you ever want to have a trend indicator, this is the trend is your friend indicator out here, and that is a summation index. That has turned down. So we are seeing here a number of signs just inside the New York Stock Exchange where the market is beginning to turn. Even with yesterday's move up, even with that little bit of a gap up yesterday, well, we'll see a gap down here in a little bit of time here. But the bears are the ones that actually are in control of the sessions right now. 877-927-6648. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartleys, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 86 points, trading at 15,323. S&P down almost 10 points at 1650. Composite off 16 points, trading at 34.72. Russell 2000 leading the charge to the downside, off $6.50 here. Google down 5, Apple up $1.50. Microsoft down 22 ticks, Intel off 4, Cisco down 4 ticks as well. Leading the charge to the upside, the fresh market. TFM out there, $6.50 to the upside. That's up 14%. They're out with numbers here before the bell. They reported revenues here. Let's see, what were their revenues? Net income of $22 million versus $19.27. I know personally I added to a portion of that net income, as well as their sales. Q1 sales $367 million versus $324 million. Nice product inside that store as well. Smithfield Foods being bought out by a Chinese fund out here. That's up 24%. That's up $6 and change. AEGR. I don't even know how you pronounce that pharmaceutical company. Agerion is probably butchering it pretty good, but they're up 8%. That's up $5 and change. Stewart Enterprises, not to be confused with Martha Stewart, because this is a funeral home company, I believe. Let's see, I think that's what they operate. Let's see here. They operate funeral and cemetery products and services. STEI, that's up 34%. That is being bought out, acquired by an all-cash merger with a total let's see here. Who is it? Service Corporation International. SCI is buying them out. So a little bit of a premium there. Netflix today trading up. It's up $3.50. We've got mentioned Apple, SLM Corp. SLM is trading up 12% this morning. See if there's anything behind that news here. Sallie Mae announced strategic plan to create a separate educational loan management. That's moving that stock higher. Guidewire, GWRE, up $1.68. Tata Motors, TTM, up 4%, up $1.15 out there. To the downside, Google leading things to the downside, off $4 and change. MRC Global, MRC is a ticker symbol. They're down 10% this morning. That's off $3 and change. I don't see what is moving that stock here. National Grid PLC, NGG, off about 5%, down about $3. Inter Oil Corp, IOC, off $2. And McKesson, that is the pharmaceutical distributor. They're off about 1.5%, down $1.50. Again, our call number is 877-927-6648. So, we took a look here at what I consider to be a change in the trend in the market. We were looking at the New York Stock Exchange. We took a look at the key reversal day. We took a look at the oscillator moving below zero. That was certainly a fumble out there. We see the summation index moving down. The trend is your friend. Well, that shows you that right now the trend is changing directions out here. If we take, and we had that key reversal day, if I didn't already mention that. I've got on my screen here the VIX chart. If we take a look at the VIX, one of the ways that I like to be able able to take a look at and use the VIX is just simply understand where's the VIX trading in correlation to its 50-day exponential moving average out there. That is the blue line in the upper portion of the screen out here. And anytime the VIX gets above that 50-day line, you'll see some shaded boxes here on my screen. Each of those time periods have led to market-style corrections, maybe retracements to corrections out here, and it's important to be paying attention to the VIX. Well, take a look at yesterday's action with the markets being up the way they were. The VIX just simply came down and tested the 50-day exponential moving average. Yesterday it was at about 13.54. The low yesterday inside the VIX, 13.56. Actually never even got down to that level. We'll call it close enough for our type of workout here. Right now it's actually trading at about the 200-day exponential moving average. That's the black line. Just happens to be on my chart. I really don't use that as much as just taking a look at where's the VIX traveling with regard to the 50-day EMA out there. Go do the work yourself. Go put it on your charts. What you'll find is that any time that the VIX is above that, gets above that, you see some type of change in either a slight pullback to a significant correction in the marketplace. And right now, it most certainly is above that level. So there's another reason to say, hey, let's be cautious out here. Now, what else do we have? Well, we've got the currency pairs. Let's go check out the currency pairs out here. Let's go take a look at the one that tracks the markets better than any other, and that's the Euro Japanese yen currency pair. So let's go take a look at that currency pair. Here's the 30-minute chart. Let's not pay so much attention to that. Let's switch this over to a daily chart out here. We take a look at the daily chart. What we can see is that you've got really two patterns out here. You've got this little 1.272 butterfly. That pattern was formed out here. This is the daily chart as well. This was formed here on May the 14th out there. The market, the Euro Japanese yen here tried to take out that level on May 22nd, but it failed. This pattern is still in place out here. There's actually two butterflies. I show this one here. This is now coming back to the time period of the high from February 6th down to the low that was established on February 25th. What you'll see is if I just simply move my make the pattern look like about that or what have you, you'll see that at 133.21 or right around that level was also a 1.618 butterfly sell pattern in the marketplace. This is the black line on here. This is the track of the S&P 500. When we start to see a change in trend here in this currency pair, this is where all of a sudden the fuel then would be to the downside. Now, if the euro yen takes out the 133, we'll call it the high here of May 22nd out there, 133.78, then you're going to see the market move higher. But it's not going to move higher with the Euro-Japanese yen moving lower. Now, so far, all that it has been doing, meaning the Euro-Japanese yen on a daily basis, has been consolidating really sideways. We haven't seen any kind of significant, substantial pullback in here, but it does indicate a change in trend is coming. And so that is another signal here, in my opinion, that the market is getting ready for a significant correction. Oh, by the way, how about that 6-month seasonal cycle out there? So it's no longer really being talked about in the news, but the reality is it's not sell in May. It's just the cycle begins in May out there. It doesn't always have to be on May 1st. Sometimes that it actually is. In this case here, most certainly it is not. It's a 6-month seasonal cycle. It is going to take these markets back to their 200-day EMA some point in time between now and October. And quite frankly, moving back to that level is not that bearish over if you take a look at just simply coming off of the November lows out there. It's not a substantial retracement in the marketplace. So for that to actually take place, that's where your buying opportunity, maybe your buying opportunity would come in. Now you've got some other patterns that you need to take a look at there, but that is that most certainly, to me, seems like that is also in full swing out here. Now, I'm not just looking for these bearish patterns out here. I'm just looking at a number of the signals. Oh, what about the signals? How about copper? How about the old copper versus the U.S. markets out here. Let me go see if I can find that chart on my screen. Give me a moment here to go find that. I know I've got this. Here's high-grade copper, and if we take a look at that, this has always been a great indicator here. When you see a divergence, the top portion of this chart here, that's the high-grade copper futures contract. And when you identify divergences with copper going in one direction, the market going in another, it's always led to significant market corrections out there. You know, we've seen just simply a substantial one going all the way back into the early part of February with copper just simply getting the kibosh. I mean, truly moving down, while we've seen our markets here since the February time frame moving higher. We had a small retracement out here, and then we saw copper move again lower from about the May 10th time frame. We'll call it May 10th to May 21st, where copper made lower highs out here, yet the S&P 500, which is the bottom portion of the screen, was making higher highs out there. So this is another indicator of a leading indicator of corrections in the marketplace out here. Oh, I didn't mean to delete that. That means now I've got to go rebuild that. Oh, well. That's the way it works out here. If we take a look, let's take a look at our GE chart out here. You know, GE is a great leading indicator for the Dow. When GE, which is the upper portion of the chart out here, when this has divergences, this is always a leading indicator. You can't tell which day, but it's always a leading indicator of a market correction. Well, if we take a look at GE and you come back off of the high out here from February 19th all the way to the high that was put in essence, right around February the 21st, pretty much was just simply a horizontal move out here, but that was not what we saw in the bottom portion of the chart here, which is the Dow. That was a vertical move to the upside, whereas GE was nothing more than really a horizontal move, making, you know, for the most part, a double top type formation out in the marketplace. So there's another leading indicator that is saying, you know, not so fast out here. And now let's go over and take a look at that 30-minute chart out here, the 30-minute chart. If we take a look at the key line to me is really the close of Friday or the open of Sunday evening inside the futures market here. And the reason is because, you know, not so much the full moon, but if we look up to the skies, and I do believe that we can learn from the skies out here, one of the best indicators, most consistent. Now, the full moons, new moons, and so forth, you can kind of throw those out the window. They have not worked here as of late. They haven't worked here for months and months. But the one indicator that does work, and it works it's always worked, and I can't tell you why, I just know that it does. It's that perigee and apogee lunar phase out here. Perigee is when the moon, during its cycle, is closest to us. Apogee is when it's furthest away. You want to know how I remember that, folks? It's just simply, and I know it's apogee and perigee, and I know that A is the first letter of the alphabet, and so that would be closest to me, right? And I know it's just the opposite. It's actually furthest away. And perigee, that I know that then becomes the lunar cycle where it's closest to us. So the moon, in fact, would look a little bit larger out here. Now, that price level, when it happens over a weekend, and it's not a swing point. You can clearly see here that it's not a swing point out here because the close on Friday was at 1650.75, and the open on Sunday evening was down at 1650 even. So it's right around that 1650 level. And what the ES Mini actually did here this morning, this is going to be key to watch in the marketplace, because when prices below this area, you want to be short. When prices above this area, you want to be long out here. If you don't believe me, go back and put it on your futures contracts, put it on, and you can go time it to the minute, to the actual minute. And oftentimes these come in here during the week when the markets are open, and it is just simply amazing. I cannot tell you how it works, why it works, but it's one of those great trading secrets in the futures marketplace. So if you do trade the futures and you don't trade with this and you don't do the work, shame on you. You really should, because I just gave you there a pearl, and you will just simply be amazed if you go watch what takes place here. Now, what we're seeing is it's going to be key today to see, or today, tomorrow, is price going to stay below this perigee line? Because the last several phases of apogee and perigee, it has remained above that area. So this is going to be very helpful in trying to identify a change in trend that is really going on. This is using the ES Mini, using the 30-minute chart out here. So those are all of the factors that look to me like what we are truly seeing here is a change in trend. It's It's the fumble that was created a week ago today on Wednesday in the marketplace. And in a market here where the bulls have absolutely been rewarded for buying the dips out here, I don't expect that this is going to be a market that is just simply going to go straight down. And if we take no market ever does go straight down. If you just use the 30-minute chart of the ES Mini, it will help you to understand where the bulls and the bears will show up, where you've got actual support. The next level of support, quite frankly, inside the ES Mini, because all that's really taken place this morning here, since the early stages, when the ES Mini was pushing down in the 8 o'clock time frame into the 8:30 time frame, when it was in that oversold territories, it just simply moved its way off by bouncing slightly higher and bouncing into that perigee phase out there. And if we do take a look at this, what you will see is the next area of support is really going to be that hammer that came in at 10:30 on Friday morning. So what we need to be watching for is 1634.50. Now, just below that is going to be that Morning Star combination that came in at about 5 o'clock in the morning on May the 23rd out there. So you've got support at 1632.75. It was defended. We know it was defended. We know the bulls were down there defended on Friday on that May 24th hammer candle. And so that's going to be something we're going to absolutely want to be paying attention to inside the ES Mini. 877-927-6648. Let's go take a look here at the metals markets. Let's go see what's going on inside the metals. Right now we've got gold trading up $5 and change, so not a lot of real movement out here. It was up, I don't know, 13, 14 bucks earlier. Let's see the high inside gold so far today. $13.93. Now, $13.93 is the high. It's trading at $13.84, and the king right now is down about 47 ticks. I got a slight delay on it, so it might be off just a tad, but it was down even further than that, and gold couldn't get moving. Now, we know that gold here is priced in U.S. dollars, and it tracks the U.S. dollar index really, really well. So with gold not being able to move very high, and what I mean by very high was not even being able to break out of this swing point from April 16th, that high of 1404.20, not a real bullish sign, not a real positive sign for Goldilocks out there. 877-927-6648. We'll be right back, folks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page at TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. The Dow off about 89 points right now, and the 30-year Treasury here trying to get some footing after truly getting smoked here yesterday, getting all the way back to the original consolidation low out here, that low of 140.14. Right now trading at 141.1. Let's go down to Miami Beach to Michael. Michael, thanks for calling. Thanks for listening. I understand that you're a first-time caller. Michael? Uh-oh. Do we have Michael out here? I can't hear Michael. That's not good. I don't know if it's my earpiece or... Michael, hello? I don't know if I can... Michael, are you there?
Yes, sir.
Oh, great. Okay, perfect. What did you... Tell me what... Thanks so much for calling. We've got about 3 minutes here before this segment of the show is over. What did you want to look at?
DuPont. Wanted to know what your take was on it. Possibly looking to short it short term.
Let's go take a look at it. So we're taking a look at DuPont here. Ticker symbol is DD, and you are taking a look at possibly shorting this. Now, the problem here, let's take a look at DuPont. So as I pull this up on the screen here right now, what you've got inside DuPont is you've got two real high-volume sessions here on May 9th and May the 10th out here. A volume of 21 million and 22 million, respectively. And that area has held as a support zone. DuPont here had this reversal session on May 22nd, and it did that when it traded up as high as 56.78 down to 55.33. The very next session, Michael, as it was moving down, it moved down with 6.7 million shares. But take a look. That was really going into those days with 22 million shares, and you can see that wasn't enough to really push it down. I would suggest, is there a reason specifically why you're looking at DuPont itself as the short trade versus, maybe versus the diamonds, versus the overall Dow itself? I don't know why. I apologize. I'm struggling to hear Michael out here.
Just looking to profit from it.
Yeah, well, that's what I would recommend that you do here is not actually take a look at DuPont as your short. There are other candidates inside the Dow that would be better shorts, in my opinion, than DuPont would be. And I would say just simply if you're going to go short, just go short the entire sector of the Dow. We have seen the Dow have some volume off of the highs out here. in a number of different equities. And what I would do, Michael, is I would take a look at how about maybe like the DXD and the entire Dow. Would you be open to doing something like that? I don't know why we're struggling with the sound. It may just simply be on my end, and if that's the case, I really apologize. I really apologize for that, Michael. So my recommendation here is not to actually short DuPont out here, but instead, because this has got a couple of high-volume bars in here, even the session of April 23rd, it's got 15 million shares to the upside, and I haven't seen this break a swing point with volume to the downside. So check out maybe going short the diamonds, the DIA, maybe use DXD out there as your best opportunity. And what I would recommend is waiting for the next bounce in the markets and try to sell this thing at a little bit higher price than where we are at right now. So, Michael, thanks so much for calling. My apologies for whatever audio feed issues that we had out here. Folks, it is the end of our show, and I want you to remember this. Remember that you have an amazing power within yourself, and that power is so strong that it'll create a life of abundance, cure incurable diseases, build billion-dollar businesses, paint magnificent masterpieces, but most of all, folks, create fantastic, loving families. Thanks so much for being a part of the TFNN family. Have a great Wednesday, folks. We'll see you in a few.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.